So, you want to start a business, and you're trying to determine which type of business to form. Should you be a sole proprietor, a partnership, or a corporation? Which will you choose? So you want to be a corporation, huh? Let's talk about what that means exactly. A corporation is a separate legal entity. The corporation files a separate tax return. It can buy assets in its name, enter contracts in its name, and take out loans in its name. A corporation is owned by shareholders or stockholders. These stockholders have certain rights: the right to vote, the right to receive dividends if the company decides to pay a dividend, but corporations are not required to do so, and the right to distribution of assets if the company is dissolved. A corporation can be public or private. A publicly held corporation is one that has stock that is publicly traded on a stock exchange. A privately held corporation does not have stock listed on a public stock exchange and cannot be purchased by the general public. Privately held corporations usually have fewer stockholders than a publicly held corporation. Some corporations start as a private corporation and then go public to raise additional funds, usually for expansion and growth. The stockholders of a corporation elect a board of directors. This board oversees the corporation, sets policy, and appoints officers to run the business. To form a corporation, you must file articles of incorporation within an individual state. These articles detail the nature of the corporation's business activities, the stock to be issued, and the members of the board of directors. There are advantages and disadvantages to a corporation. Owners of a corporation have limited liability. This means that the most a corporate owner could lose would be the amount they invested in the company. They're not personally liable for the corporation's debts. Ownership is easily transferred and does not change the structure of the corporation. A corporation can more easily attract investors and raise funding when needed than other forms of business. Corporations suffer a double taxation. As we mentioned before, a corporation is a separate legal entity and must file taxes. Therefore, taxes are paid on a corporation's earnings. If a corporation also distributes earnings in the form of dividends to the shareholders, the shareholder has to pay tax on these dividends for a second time. Corporations are also required to report certain information and file certain reports at the state and federal level. Now that you have all the information, is a corporation the right business type for you?